Euro US dollar. Take a look at this. This is big news. Longs 264,000. Maximum size is 266. Now we've reached close to maximum size already. And what took place after we reached this maximum size or close to maximum size? That's right. Retail traders took profits on their positions, and guess what? How's it going, fellow traders? Magic Trader here, and this is your CFTC report for the data that was recorded on July 18, 2023. Welcome back, welcome back. Here's your latest data from the institutions reported July 18. Take a good look. And as always, let's start by examining gold. Here we go with gold. Now, what do we see? Let's take a quick look at what they were doing recently back in April and May. We had the long positions reaching an aggressive amount. And so as I suggested, they were going to start taking profits, which was going to fuel a move to the downside. And that's what took place. They dropped their longs from 266 down to 220, and now let's see what they are doing. They're increasing their longs once again up to 263,000. All right. We have new institutional demand being created here, and price just rallied slightly. We don't know exactly what's going to happen at this point because there's something that I've been mentioning to members for quite some time, and that is the lack of structure taking place on the charts. For instance, if you take a look at the monthly chart, there are no trends to the upside. Price has been ranging for quite some time, all right? So it's going to take some time until we break out of this range, and until we break out of this range, a sustainable direction is not going to be had. So, look at shorts. You see, they haven't been piling into shorts. And so, therefore, we can't suspect that price is going to be dropping. Yes, they're starting to add back to their longs. But again, keeping things in context, we have a range. Until this range breaks out with price closing above the range, there's no direction that we should be betting on with respect to gold. Okay? That's what we have. Now, if we take a look at the sentiment here with retail traders, they're about 50-50, okay? About 51% short, 49% long. So there's no clear direction based on retail sentiment. Now, they were long at the highs. They got lured into buying gold at the highs, and they've been just offloading that long position, starting to get into shorts. And now the banks are driving price to the upside over here. Okay, retail traders are taking a loss on those shorts that they entered. All right, let's move on to the next one. We have oil. What do we see with oil? Longs have been cooled off for a very long time. So let's just point that out here. Take a look here, and you'll see this column here has been blue for a very long time, meaning longs have been cooled off. So the banks are not focusing on aggressively increasing their long exposure. If anything, just recently what we've seen is they were getting a little bit more with their shorts, a little bit more aggressive with their shorts. But bottom line, when we look at the sentiment, we can see that it's been quite all over the place. We had some bullishness here, some neutral here, a little bit of bearishness here. Now we're entering back into neutral territory. So there's nothing very strong here to determine the price direction in the coming weeks and the coming months. So I'm not trading oil, and I haven't been trading oil for quite some time. We're stuck in a range here. Here's the supply that we dropped from. Here's demand that we are rallying up from until this range breaks on the monthly chart, just like similar to what we're seeing in gold. There's no definitive direction that we should be watching for, okay? There's nothing here sustainable, so we will move on. The dollar. Price dropped, created some supply here up on the monthly chart. It also created some supply here on the weekly chart. We see price rallied, contacted this area of supply, and then they filled in supply, causing price to drop. They recently pushed price back up and a little bit more supply, pushing price a little bit further. Now, as you can see, we have an institutional demand area here on the monthly chart. That's at the $97 range. So this is acting like a magnet for price. But as I've mentioned to students, we are in a situation where price is just sitting and coasting, like I say, in the middle of the ocean. So they haven't left dock, so there is no momentum heading in any specific direction. They are just coasting in the middle of the ocean. The winds are going to come, sometimes pushing north, sometimes pushing south, but there's nothing sustainable here for a positive direction on price. So we're staying out of this market as well because there's simply nothing to be trading here on the charts. All right. Let's take a look at the Aussie dollar. Same thing with the Aussie dollar. They've been doing the same thing over and over again, and you can see it here with their short positions. They increase shorts and they close them, then they increase them again. That's all they've been doing, the banks, okay? If you take a look at the long column here, you'll see that they haven't been focusing on longs for a very long time, okay? So there's no sustainable moves here. There's no trends on the charts, and we're not getting any clear indication as to what the banks want to do over a sustained period of time. What I can tell you is that retail traders are about 64% long right now, and that's pretty much all there is to see with the Aussie. So until there's something a little bit more sustainable, this is not a chart that I want to be trading. Recently, we had institutional demand coming into play here, as you can see right here, and it caused price to rally up slightly. But besides that, there's really been no other momentum that has been coming into this market. So let's move on to the USCAD. What do we see? Well, we see that recently they contacted an institutional selling area. So they started selling, pushing price down. They came down a little bit more. Our target has been reached. Now we have institutional demand coming into play here. As you can see, it's been holding quite well so far. But look at the long column. Okay, do you see what's going on here? They had been aggressively adding to their longs, okay? And that's as price was reacting to that demand area. But since then, they've cooled off their positions, all right? And if we look here, coloration, 50-50. There's no specific direction that they're building their positions in at this moment. So again, another chart that we should be staying clear from. I could tell you retail traders are about 62% long, and they're probably going to start offloading those longs for shorts, and then price may start to build momentum to the upside. But as far as I can tell, there's nothing high odds if you're thinking about trading the US CAD at this point. So I'd prefer to be sitting on the sidelines. US Swiss, they increased their longs from 15,000 to 16,000, but overall the long column is cooled off, the short column is cooled off. We got a little bit of bullishness here, but it's only a couple cells of bullishness here, and sentiment hasn't been able to sustain itself in any direction. We do have pressure to the downside, and we've had demand areas being removed. So, you know, it can go either way. We can see a rally form from here and head up to this area of supply. Okay, this is a supply area. It's the last time where the banks were significantly selling the US Swiss. And so we'll wait and see what happens. Wait until there's, you know, some clear direction. Wait until we see some momentum building up on the charts with their positions. And then we'll join. But at this time, there's nothing here. You know, retail traders, they're about 88% long right now. They're probably going to start piling into shorts because they've been accumulating this long as price was dropping. So they're probably going to offload those long positions, switch them to shorts, and then likely we'll see a rally form. Okay. Euro US dollar. Take a look at this. This is big news. Longs, 264,000. Maximum size is 266. Now, we've reached close to maximum size already. And what took place after we reached this maximum size or close to maximum size? That's right. Retail traders took profits on their positions. And guess what? We saw price decline. It declined inside an institutional buying area. Okay. It's the last time where the big institutions were buying the euro. So they dropped it into this area and then they started pushing price up again. The latest institutional buying area is this one right over here. Okay. But with the banks nearing max position for longs, I do not want to be entering long the euro because they've already entered long. They're going to have to start taking profits. Okay. So I'm going to wait to see how they take profits, what kind of formation on the charts they're going to create, and then I will take it from there. I will point out that we have a significant selling area that's coming into play here. So a move down is definitely a high odds situation. So be careful if you're trading the euro and take this information seriously, okay? Because right now retail traders are about 70% short. Okay, they're short as price is rallying up. All right, so be aware of what is taking place here. Let's go over to the pound. Another one that I want to point out to you. Look at long positions. 135,269. That's a new all-time maximum size long position that the banks have ever held on the pound US dollar. That is massive. And so this caused price to rally into this supply zone. This is an area where usually banks will take profits on long positions or start to come in with short positions. So being that longs are reaching max size, I'd suspect that they're going to start taking profits on those long positions, and then we'll see a push to the downside at some point. Okay, retail traders are about 64% long at this point. Believe they're offloading short positions, switching them into long positions as the banks are just about to start offloading their long positions. So be careful with that as we go forward in the next few weeks. US dollar, Japanese yen. Remember, price contacted this area of supply. What did I tell you was going to happen? I said they were likely going to take profits on their long positions because they were reaching those sizes that in the past, when they reached those amounts, we saw them take profits on their longs, which fueled a move to the downside. And that's exactly what took place over here. Okay, shorts are very cooled off. Longs, they're in the process of taking profits on their longs, so we don't want to be accumulating any type of position at this point. Retail traders, they're about 59% short right now, and about 41% long. So I would suggest don't trade this. Okay, let retail traders do what they're going to do. They don't realize this is a very bad environment for trading. We got a supply area here. We got a demand area here. This is a range. Until this range breaks out, there's going to be no sustained momentum in any direction. All right, last but not least, we got the Kiwi. And they were increasing a little bit of shorts, 14 to 16,000. Look at the coloration of the cells here for long and short percentages. And it's somewhat neutral. We don't want to be trading this one as well. Retail traders are mostly long at 77%, and then we see a big decline in price. They're probably going to start offloading those longs soon, or probably add them until they reach their maximum position, and then they'll start offloading those positions. All right, so bottom line, what do we see here? Don't trade the markets, folks. Okay, now's not a good time. There will be a good time to trade the markets. It's not now. If you want to know how to read these charts, read the CFTC data. If you want to get the signals, when is the right time to trade? High probability trades, come to whiteoakfx.com and we'll happily teach you. Our school keeps on growing. Every single week we get more and more students coming in. They're starting to realize the value of what we have to offer, and you're looking to trade your trading or do something special with your trading for a change and revive your trading plan and put some serious odds in your favor. Come and join us. We'd be happy to have you. All right, guys, until next time, you enjoy yourself, and we'll talk to you later. Take care.